How's it going, everybody? This is Jose from the Stock Market 101 channel, and I hope you guys are having a great day. And as always, if you guys haven't checked out my latest videos, I suggest you go check them out real quick. And if you haven't already, hit that subscribe button. It really helps me out a lot. But other than that, let's get right into it. Stocks with high dividend yields are tempting, but investors need to be careful. Sometimes abnormally high yields are unsustainable and require a painful dividend cut down the road. Not only does that come from the stock declining when the dividend is slashed, but the stock price could plummet on the bad news. That's a double whammy that dividend investors should take pains to avoid. But here are three top dividend stocks with yields over 4% that you might want to look into. The first one on our list is Antero Midstream. Antero Midstream Partners currently yields a healthy 5.5% with an annual distribution of $1.66 per share. By 2022, the company expects to increase the annual distribution to $4.10 per share, which should translate to a 13.6% yield at today's prices. While an impressive amount of growth is required to make it work, this midstream leader is well positioned to make good on its plans for a major increase in its cash flow. Antero Midstream Partners generates a substantial amount of business supporting the operation of its sponsor, Antero Resources. That provides a relatively predictable stream of revenue and profits from natural gas gathering and processing services, as well as water deliveries. The business hasn't paid more than 4.5 times EBITDA for growth projects in the last 3 years, which is less than half as much as most peers. That helps deliver profitable growth, a healthy balance sheet, and flexibility to invest in a downstream joint venture for liquids and chemicals infrastructure. Operations are centered in the Appalachian region, which is responsible for 41% of domestic natural gas production, and it is expected to double production in the next 5 or so years. Production growth requires infrastructure growth, and Antero Midstream Partners already operates one of the largest in the region. And the next one on our list is AT&T. The stock has been sinking since the beginning of 2017, and the result is a dividend yield of about 5.9%. AT&T's dividend isn't growing very quickly. The last increase was just 2%, but the company has raised its dividend for 34 years in a row and will most likely make it 35 years in the next few months. Shares trade for less than 10 times the average analyst estimates for 2018 earnings. The beatdown valuation may reflect concerns about the amount of debt the company has taken on while building its media empire. The company acquired DirecTV in 2015 and Time Warner earlier this year. Those mega deals have pushed AT&T's total debt above $180 billion. But the company has generated about $20 billion of free cash flow over the past 12 months, even after pouring nearly $21 billion into capital expenditures. AT&T's scale and the massive barrier to entry into the wireless business give the company a competitive advantage. The debt that AT&T has piled on makes the company more fragile. It also makes AT&T a riskier dividend stock by reducing the margin for error. If the company's media bets don't pan out, or if the wireless business faces more intense competition, that dividend growth streak could come to an end. But a cheap valuation and a high dividend yield makes AT&T stock worth considering, as long as you understand what could go wrong with this company. And last but not least on our list is Terraform Power. Stocks with high dividend yields can often be sending a warning sign to investors. Relatively high yields imply that investors don't think the dividend can last long term, or that there is something inherently risky in the underlying business. One high yield stock that has surprisingly strong fundamentals is Terraform Power. Terraform Power owns a portfolio of over 3,600 megawatts of wind and solar assets, and 95% of energy production is contracted for an average of 14 years ensuring the stability of long-term cash flow. Management even says it has a clear path to grow the dividend 5 to 8% through 2022 while paying out 80% to 85% of cash available for distribution as a dividend. The remaining 15% to 20% of its cash will help fund organic acquisitions while they're available. Terraform's power dividend yield of 6.5% seems high, but the new management from Brookfield Asset Management, which controls the company, is running a fairly conservative operation. They've already identified 25 million of annual cost savings and 20 million of revenue improvement from increased performance that will increase the cash flow over the next year. The slow expected dividend growth and cash retained to fund growth projects will ensure the dividend remains strong long-term and continues to be a winner for investors. So that's the list right there of Antero Midstream, AT&T, and Terraform Power, all with a relatively high dividend yield that may be sustainable. Alright guys, that's the end of the video. Please drop a like, subscribe, and turn post notifications on. And let me know in the comments if you own any of these 3 companies in your portfolios. But other than that, I'll see you guys in the next one.